What's going on, guys? Back at it again. So, the title of this video is 33 billion invested, the top 10 cryptocurrency / blockchain sectors that VCs invested in the startup ecosystem. I'm your host, Dylan Brown of the Coffee Flavored Crypto YouTube channel. This is where you can get the latest in crypto news, project reviews, and cryptocurrency trading edutainment. Learn about different altcoins, historical Bitcoin cycles, and get the latest in everything crypto. Follow our other social media, specifically our Twitter page. It's C_F_crypto. Again, C_F_crypto. That is our Twitter. Keep watching, guys. I got more for you. This is sponsored by Body Brand LLC. So, the crypto and blockchain space is exploding. Both new and established firms are raising new funds at a record pace and of massive size. It's obvious now that real investors are not the only ones, or retail investors are not the only ones who have caught the crypto bug, let's say. The growth in valuations for crypto / blockchain companies has significantly outpaced the broader VC market over the last year, with the median pre-money valuation for crypto / blockchain is expanding its lead each quarter. So let's read some data here. So in Q4, guys, in Q4 2021, the median pre-money valuation of a crypto / blockchain company that raised in 2021 was $70 million, 141% higher than the median across all VCs at $29 million. That's huge. Follow the money. Let's check out the top 10 sectors invested in by VCs, and then let's wait until the end, or I'll put in the description for the bonus sectors to be revealed. The coffee flavored crypto, so that's significant, guys. Let's touch on that real quick. You see the money, you see how it's flowing in. I think a lot of people are still skeptical in the masses, but if you follow the money, at the end of the day, the money does not lie, and people are putting money into these crypto projects because they want to see a return. And that means this is kind of where the you got to follow the whales at some point. And this is where the money is going. It's great technology that is being built on top of the premise of what Satoshi put out with Bitcoin, and you're starting to see the adoption. This is a new industrial age, and this is the age of banklessness. This is the age of decentralization, decentralized servers basically, and self-sovereignty. I think that's a very important topic to touch on before we get into the video. So that is Coffee Flavored Crypto's purpose, guys. It is to be the top aggregator of crypto info. In this video, we will answer that question for you so you can be a part of the future of technology. And hit that like button, guys. Share this video along the way. Hit that notification button, that notification bell as well. You know, let's get it going. So what do I have on the screen here? We are looking at Coinbase. So the number one sector that was invested in 2021 was the trading, exchange, investing, and lending space at 41.83%, or we can say 42%. So right now I'm looking at the screen. Right now I have Coinbase up. So let's read about it. So Coinbase is an American company that operates a centralized cryptocurrency exchange platform. Again, centralized cryptocurrency exchange platform. Coinbase is a distributed company. All employees operate via remote work, and the company lacks a physical headquarters, which is kind of interesting if you're interested in business. It is the largest cryptocurrency exchange in the United States by volume, by trading volume. So I put that in there. I think Coinbase was one that like a lot of people know, so I put this in there. Again, I pointed out centralization because there are decentralized exchanges that I think personally I would think people should try to use. I use Coinbase myself, but not your keys, not your crypto, guys. Just remember that. So Coinbase is a centralized exchange, and there's other centralized exchanges, but there's also decentralized exchanges, guys. Just look it up, do your research before you invest. I think Coinbase is better than things like Robinhood, but Coinbase is still centralized, so that kind of goes against the premise of what cryptocurrencies were meant to do. But they all have their function. I'm not trying to guide you guys in any way. I'm just trying to lay out the information for you so you can make the decisions you think are best for yourself. Let's look at number 2 on the VC list. Let's see. Web3, NFTs, DAOs, and the metaverse at 17%. Guys, that's significant. Let's click over to the example I have for you guys. MakerDAO. MakerDAO is a peer-to-peer organization created on the Ethereum network to allow people to lend and borrow using cryptocurrencies. AKA, this is a decentralized protocol. This is a decentralized protocol. The P2P organization is also known as a decentralized autonomous organization. And these terms are important, guys. So if you want to learn more and you're like just really starting out, those are good words to Google or put on YouTube or look at some scholarly articles. Decentralized autonomous organizations. So it gives a crypto lending credit facility that gives loans at a predetermined interest rate. If a MakerDAO user wants to borrow, they would first deposit the Ethereum into a Maker smart contract, and the smart contract creates a collateralized debt position, a CDP. Again, a collateralized debt position. And these are important, guys. Another key word to take away from this, a Googleable term to look up and try to understand more about what the crypto space is doing. So if let's say you had 40,000 in Ethereum, right, and you're able you don't need a credit check, you don't need anything along those lines. You are able to use that 40,000 in Ethereum as collateral to take out a loan. So you can, most likely it's probably about 75% of the loan. So, and after the 75%, your position gets liquidated to pay off the loan. So what we're saying is I would do at a 50% if the limit is 75%, and for whatever so if you're taking, let's use the example, the 40,000 Ethereum, you would take 20,000, and now you just got 20,000 just because you have the Ethereum. Now this comes at interest rate, but it's predetermined. And there's a couple of cases that where you could use this. You can almost be your own margin, right? So let's say the price of Ethereum is down right now, or another altcoin is down. You just got 20,000 on margin basically, and you can put it back into the position you have. Let's say ETH go up, and then boom, you just made it a significant X on your margin that you just took out because of the position you were holding. That's powerful stuff. If you want to buy a house and you don't necessarily have credit, you can use your ETH as collateral and to buy that, and then you pay back the loan. So these are powerful things, guys. It's almost your own lender in this sense, and it's powerful stuff. You haven't seen anything like this, only from certain things like banks and things along those lines. So take away, check out decentralized autonomous organizations and check out collateralized debt positions. I think those are two good terms to Google if you're new. And let's continue, guys. Number 3, custody. A very important aspect of what the pillars of decentralization are. Custody is coming in at 10.5%. So simply put, crypto custody means securing the private keys. Again, not your keys, not your crypto. Look that term up. Not your keys, not your crypto, guys. So private keys that proves you own the fund, or the owner of the funds held within your crypto wallet. So excuse me. In traditional banking, all custodians are financial institutions as required by law. With crypto, however, holders have the opportunity to become their own custodians. Again, being bankless, being self-sovereign. It's powerful stuff. You want to be able, this is my own take on it, but you want to be able to control your environment as best you can. You want to be able to resist the environment as best you can, so you create a life for yourself that is based on your own effort, your own meritocracy. Meritocracy should really be the religion that most people live by, but as you can see, like, certain things are in other people's control, and that's when I mean, you're hoping, basically hope. I want to be hopeless, but you're basically hoping someone does the right thing for you. And as we've seen in the past with banks, greed is a powerful force in nature. So if you are your own owner, you're able to control who has access to this, and you have autonomy over your own life. I think that's powerful things that people should take note of when you look at this stuff. Don't think it's just like, oh, just stupid cryptocurrencies, da 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 da. It's about self-sovereignty. It's about owning your own bank, being bankless. So I have an example coming up right now, guys, on the screen. Bear with me, I'm my own producer at the moment. Boom boom boom. We got Ledger Nano X, to be specific. Ledger Nano X ensures the secure storage of the private keys that gives you access to the crypto assets that you have. So the entire point of Ledger hardware wallet is to offer the best possible security for those keys by keeping them offline. Again, not your keys, not your crypto, but if you own your keys, you have your crypto. So, and they do this always, right? So, whereas a hot wallet, aka like a MetaMask, it generates your private keys online and also stores them within the system that's connected online. So the Ledger Nano X generates your private keys within the device itself, the hardware wallet, and stores them there too. So this means your keys will never ever be exposed to online threats such as hacks or malware with the Ledger Nano X, and you don't need to entrust them with another entity as well. So one thing you can do, if let's say you have a Ledger Nano X and a MetaMask, you can connect your MetaMask to your Ledger Nano X, and that Ledger Nano X can basically provide the security for your MetaMask. So now you can safely send and flow cryptocurrency without exposing your private keys, and someone can hack your assets in that way. So there's ways around, if you want to use the hot wallet, if you like the optability or the UX of MetaMask, like, there's ways to protect yourself, man. Again, number 3, that was custody at 10.5%, guys. So let's hop down, let's go to infrastructure. I'll be a little quicker on this one. Chainlink, I'm using, well, let's start off. Number 4 is infrastructure at 7.04%, and I'll leave the report that I got this from in the description, guys. Check it out. It's cool stuff. Other information on that report, but I thought this was a cool aspect to point out for a video for you guys. So Chainlink is my example for the infrastructure. There's other things. There's mining companies that could have been put here, but I thought Chainlink would be a cool, interesting thing to put here. I think you guys will appreciate it. So Chainlink is a decentralized Oracle network that connects smart contracts on blockchains with real-world applications. So using a system of nodes and operators, it is able to answer data requests from smart contracts by collecting data from multiple sources and reconciling it to provide a single reliable piece of information. So I think that was interesting. Check it out. I have it on the screen here. It's a website. Dive into it. Get into it, guys. Get into it. Here, we'll hop down. All right, so I have Aave on the screen, as you can see. So number 5 coming in is DeFi, and I think this space is going to grow in 2022, so you'll see more investment. But at the moment, this came in at the moment for 2021. This came in at 4.89% of VC funding. You see Aave on my screen, right, guys? So Aave is a decentralized finance platform showing liquidity protocol. So Aave is open source and it is non-custodial. So the protocol where users can earn interest on deposits and then borrow assets with a variable or stable interest rate, similar to the MakerDAO model. This protocol is designed for easy integration into your products and services. Again, another powerful lending tool, another staking, like earning interest, and then building applications as well. So, you can supply, stake, borrow, vote. You can do a lot with Aave, and I think it's a good example of what DeFi is about. So I use this as an example. Next one, we're coming in hot, guys. We're coming in hot with number six. We're halfway through, guys. Number 6 is enterprise blockchains, coming in at 4.06% or 4%, let's say. So before we get into like my example of it, I have 4 key elements of what an enterprise blockchain is. So we want to look at 4 things. So it's accountability, permissioned, mutable, and scalability within an enterprise blockchain. So accountability, each node in the network which holds a copy of the transaction history is known and can be held accountable for its actions. For example, often enterprise blockchains are shared by a few companies or financial entities in a cooperative format. Permissioned. Only users who have permission can use the blockchain. The network owners can choose who's allowed to use it or who's not, aka enterprise blockchains equals centralization, guys. Again, enterprise blockchains equals centralization. So that's one aspect. I mean, you gotta basically, centralization is not necessarily good or bad, it's amoral, but in certain cases, as you can see, for enterprises, it makes sense for it to be centralized, in my opinion. For certain cases, for a consumer blockchain, no, I would say it needs to be decentralized. So it's good to see different applications to this. So we'll continue here. Mutable. So if all entities managing the network agree, the data can be changed. Again, that centralization. Scalability. So this is a good concept to listen to. So scalability. So because enterprise blockchains are typically not decentralized or as decentralized as like let's say a blockchain, they can easily support more transactions at the base layer. So that's a good concept. So more decentralization equals less transaction speed, unless you add in some scalability protocols, like a layer 2, like a layer 2 or something along those lines. But with decentralization, you have usually less those transaction fees and transaction speed go down. But if you have more centralization, you can easily support more transactions at that base layer, like I said. So let's look at the example here. I have an enterprise Ethereum. So this is new to me. I never looked it up but until this video. But so enterprise Ethereum refers to a defined set of guidelines and technical specifications to accelerate the adoption of blockchain technology among enterprises, like I was pointing out the 4 elements before. The specifications provide businesses the ability to leverage both Ethereum-based private chains and the public mainnet. The Enterprise Ethereum specifications is maintained by the Enterprise Ethereum Alliance, a membership of blockchain and incumbent businesses from around the world. So super interesting, guys. If you want to learn more about it, I believe there's a conference coming up or event coming up, so check it out. Enterprise Ethereum, and then enterprise blockchain came in at number 6. So let's continue here. Let's look at my next example and next sector within crypto, which is payments and rewards. So at 2.93% or 3%, payments and rewards came in at number 7, guys. I have Terra Luna on the screen. So Terra builds itself as a next generation blockchain payment network interwoven with stablecoins and powered by its native Luna token. So in technical terms, Terra is a layer 1 blockchain protocol with smart contract functionality that works as a payment-focused fintech ecosystem, leveraging algorithmic stablecoins. The stability of whose value is maintained by internal algorithms. Number 8. Let's hop down. Let's hop down. Number 8 is compliance, guys, at 2.5%. So I got VeChain on the screen, guys, and there's other compliance protocols, and I thought VeChain might be an interesting one to use. It can be used in different, maybe looked at as different sectors, but there's a compliant aspect to this. So blockchain-based platform, VeChain is that records the truth of what happens at every stage of the supply chain. It combines physical tracking with blockchain records to keep tabs on real-world products from production to delivery, helping to prevent fraud and increase transparency. So this is a good thing to point out. I mean, you see, I'm in America, guys, so as you can see, supply chain has become an issue, and people are trying to go back to different points at the cradle to grave, or the supply chain, and trying to get information where are we going wrong. But if we had VeChain, it would be easier to comply and have that transparency for where the mistakes are happening and who's actually causing the issue at the supply chain level. So it has real world applications. Again, compliance coming in at number 8 at 2.5%. Again, this is from all 2021, guys, so keep that in mind. Let's continue here. At number 9, guys, we have the grandfather of them all, the layer 1 protocols, coming in at 2.22%. And as you can see on my screen, I had to use it, man. Bitcoin, which is a digital, decentralized, and partially anonymous currency, not backed by any government or other legal entities, and is not redeemable for gold or other commodities. It relies on peer-to-peer networking and cryptography to maintain the integrity. Big stuff here. I mean, you love to see it. Like Bitcoin really set the groundwork and provided that entropy into the space where government can't necessarily, not a single person, not a single business or corporation really can push it down. I mean, there's too much momentum, there's too much energy in the space. And again, I think entropy is a good word to use. That it created basically a universe in itself, and it's created a whole market. And you see all the projects I have talked about beforehand, and more to come. And there's a lot of I think there's a lot of philosophy, and then there's a lot of technical, and it's meeting those two in the middle. So I think Bitcoin is a great example for the layer 1. I had to do it, the grandfather of them all. And without Bitcoin, a lot of these coins wouldn't even be able to exist. The premise wouldn't have been had the foundation to build upon it to this point that we're at right now. So it's a great thing to talk about. What Bitcoin has done to the ecosystem, and then life in general, how people view what money is. I think a lot of people learned about their money. And coming in at number 10 to close out the video, guys, layer 2 and interoperability. So I actually think there'll be more funding in this sector. Even with let's say I have on the screen Polygon. Even with a Ethereum 2.0, Polygon is still going to be needed. Layer 2 applications are still going to be needed to scale up the base layer, the layer 1. So at 1.61%, the layer 2s come in at number 10. I think that'll increase. So I have on the screen Matic, or Polygon Matic. So Matic is the native cryptocurrency of the Polygon network and is used to help drive development across the network, and can be used for staking and paying for transaction fees. It is an open source framework and a protocol for building and connecting Ethereum's compatible blockchain networks. Polygon developers are working to address Ethereum's major inefficiencies, such as low speed and high costs of on-chain transactions. So again, even with a Ethereum 2.0, you still need layer 2s to help with the scalability and the transaction speeds and the cost for fees and things like that. So guys, look here. That's it for my video on VCs today. So in total, 2021 saw 69 fundraising rounds, with deals exceeding sizes of $100 million, guys. These deals, those that raised more than 100 million, accounted for 22 billion, 67% of the total 33 billion invested in crypto/blockchain startups by venture capitalists. So you see where the money's going, guys. You see the influxes of money, and the market cap of the entire space is going to continue to rise. So look here, guys, if you like this video, make sure you subscribe to Coffee Flavored Crypto right now. Just click on that subscribe button below, hit that notification bell, and keep going on the crypto train with us. We're still so early in crypto and blockchain. Use this information as an initial guide as you go down the crypto rabbit hole. I find crypto to be vast and the amount of information needed to fully understand it. So check out some of our other videos that are coming along the way. This is Coffee Flavored Crypto. So now I want to turn it over to you guys. What was your favorite part of today's video? How big can the crypto/blockchain space get? And let us know in the comments, guys. Comment below, talk your ish, and peace out. Coffee Flavored Crypto.